Hello traders, this is Eli, Senior Market Strategist with Argeo Futures in Chicago. I do have here E-mini S&P chart. This is a range bar chart. It's a 2,000 point range bar. And if you look at here on the Argeo Futures Pro, you have a choice of all the different kind of charts you can have: bar, candlestick, constant volume line, point figure, ticks, and the range bar right here. So I like to use the range bar because range bar does not account for um, time. It only accounts for price. And basically a range, price would print several prices can print within that range, but when a price prints outside of that open and close, a new bar is created, and it makes it very smooth. And I like to use it to be able to identify flags so I can see continuation trade. So that my goal is to be able to identify a trend continuation. And in this case, last night I drew this. Actually, I was looking at this last night when E-mini S&P, we had a big jump, and then overnight it sold off into the day session. So this came out of this. The flag essentially is this, basically this type of it could be a square flag, but generally this type of price structure. In other words, the price prints above it, and then it would be sort of a failed high. This is a failed high has been a strategy that's been used since the 30s. I mean, Jesse Livermore used them. So if a market makes a high, failed to make high, breaks, and you would look for a break down below that, and you would sell it. And you can also look at flag. Generally, the idea is in the direction of the market. That's where I'm looking for. I like to see at least 10 bars. It literally like 8 to 10 bars print before I look for a breakout above that. This is a nice size bar. These are very small, so they still do provide opportunities, as you can see, but I like to see like nice size because the moves will be just as pronounced. And this is a nice little flag here. Market went up, pull back, and went in that direction. So this is what I'm looking for. So how do you trade it? Look for a buy stop above here, above this range, and draw this and anticipate it, and then you could put a sell stop here as a protection. I mean, proper management is a key. Proper money management is a key, and that so long as you follow proper money management, you should be able to, have a, a, a trade where you are not riddled with anxiety. You know what you're looking for. Oh, it's repeated over and over. And the beauty about this strategy is you use one strategy and you anticipate it over and over. When that happens, you take advantage of it. Sometimes this is like 10 bars right here. Sometimes the bars are created, but the moves are not that much pronounced, and you can make a decision with just to exit the trade or to stay in it. And other times that are really nice and clean. And so I can only draw 21 lines, but the beauty is, look at all these trading opportunities I was able to do. So there's a great deal of opportunity provided in these markets. You can also can relate this to another market like the Nasdaq. You can, about the same range bar, and you can see one breaks out of the other, to get an indication for a movement. So we'll talk about that in another video. I just want to quickly just mention these flags and how to trade them. And so if you have any questions, get in touch with me.